Morning traders, welcome to the Traders Lab. I'm your host, Tom B. Thanks for stopping by today. Make sure everything is working here. Can I get a screen and audio check in YouTube in the Bookmap Discord Trader Lab? Yeah, thank you, Stephen. Well, good morning, everyone. Thanks for visiting the Trader Lab. I'm your host, Tom B. I stream live Monday through Friday, 11:30 to 1 p.m. Standard Time. This stream's about integrating Bookmap OrderFlow tools with auction market theory using a volume profile in the intraday developing time frame. Needless to say, we've had a lot of volatility, a global event as far as meltdowns and news and a lot of things going on in the market, which potentially create outsized volatility and risk. And like everything in trading, you do need, in my opinion, a trading plan. And if the market does not fit your plan, you either do not trade or you adjust to the conditions of the market, honoring your risk parameters, maximum drawdowns, and the rest. If you find yourself not able to manage yourself under these conditions, it really is part of understanding the psychology of trading and how these things impact your ability to control or maintain discipline, which is a key component of longevity, in my opinion. And of course, past performance is not necessarily indicative of future results. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Grab a pen and a piece of paper. I'm going to give you some numbers that are important so you'll kind of see the lay of the land before the RTH opens. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. And please remember, this is not a trade calling room, but if we get there, we will discuss it. So let's take a look. Now, we opened higher inside of yesterday's range, and I don't think that's a big leap. Based on yesterday's range, but we did open higher, so that sets up a couple possibilities. Now, what I want to show you is levels that are created by the auction. And there are probabilities that are involved in this, but I want to show you I got to make an adjustment here. Hold on one second. One moment, guys. I'm making a couple little adjustments. Okay. I want to show you levels that are on the price map. And the thing that's important about the price map is what's over here. These are higher time frame levels, and these are created by the auction. Now, the auction is really, to make a very simplified understanding of it, and it's not complicated, is the purpose of the market is to figure out what something is worth. And it's going to move around an auction, if you will. That is, the participant behavior creates levels of high volume and low volume. And the analogy I always like to think of, and because I don't believe trading needs to be more complicated, we make it complicated thinking that in complexity we're going to find something that nobody else has ever found before, which I'm going to suggest this might not be realistic. But what about the actual function of the market? It's to figure out what something is worth. So the price goes up, the price goes down. And what is this up-down thing all about? Well, it's what's too high, what's too low, and this creates our rotations. And it does it in all time frames and fractals. So let's talk about, here's yesterday's low. This is yesterday's settlement. This is yesterday's naked volume point of control. This is like where the highest volume took place yesterday. So that's important. It's like high volume is like you go shopping, and wherever the most volume is, it's kind of what everybody is willing to do business at. And the highest volume is like a retail price in your store. Sometimes they raise the price, you don't buy it, so they got to lower the price to entice you, the buyer, back. Sometimes they put it below retail. It's called a sale. It attracts the buyers, but then the sellers raise the price back up. You see, so this is what creates our rotations, and it happens in all time frames and fractals. So this, on the way down, was a naked volume point of control. We went under it yesterday, so it was too high. However, it also leaves the possibility, even though we went through it, to come back to it. Now, going up into higher time frames, 5270-ish was an intermediate time frame point of control. Think of this like Russian dolls or fractals. So if you write these numbers down, you're going to see some interesting behaviors. Yesterday, I should say, a naked volume point of control, in other words, a retail price that we had gapped under yesterday and we hadn't returned to. So yesterday's high was here. This, if we can get through yesterday's high, which is a target for today, why would it be a target? Because there's buy stops. And if we happen to show a trend going up, then the shorts become the buyers. And where is their fuel? Above the high. It's logical. Then we have the next level up, another naked volume point of control at 95, another target. So what we know is we have under yesterday's low, a naked volume point of control. We have yesterday's naked volume point of control. We have settlement from yesterday. We have the ETH low, RTH open. Now, here's something, and I'm going to show you this. Let me see if this all lines up. Yes. This is the ETH. I'm just going to open it up so you can see it more clearly. And what this is basically these are consolidations. So the market, get over here, rotates. And if this is too high, it leaves it. Then it does this kind of rotation thing. And these are consolidations. And what a consolidation is think of it as an auction inside of the bigger auction. So auctions inside of auctions. You guys think of them as time frames. I think of them as fractals. They're not regulated by the clock. They're just regulated by participant behavior. Similar, but not exactly the same. Now, the highest volume in the ETH was here, overnight volume point of control. This is important. This operates the same as these. All this is interrelated, okay? And different time frames or fractals. Here's what's important about this. When we open in the RTH, this is the fairest price on the last auction, which is ETH. Out here, where's the outside edge, and it's called a low volume node, and this is the same concept. Oh, that's too high. I'm not paying it. And you see how the volume tapers off? Well, what that is saying is there's less buyers up here. And then if we run out of buyers, what happens? The sellers lower the price, and we want to get back to a retail price. But now we're going to go, how low do you have to go to get your buyers? And if we find our buyers, then we're going to rotate back up to retail. So this is what creates rotations. Now, this is our outside edge, and I mark this. It's called the low volume node, and I put a little X there, so it's for ETH. So it's not RTH, it's ETH. So I have this level from the ETH, and I have this level from that was a naked volume point of control that we took out. But when we come under one of these, and if it's still too high, if we come back to it, I want to remember it. It's the same thing as this up here. This was an intermediate time frame. I want to remember it. So it's just the market has memory. So this is before the RTH open. By the way, if you have questions, please post them. I'll do my best to get back. And I want please keep them related to what you're seeing here. And if you're in YouTube, please give a thumb up. If you find this interesting, the Trader Labs, you understand, is a community of like-minded traders that have come together to leverage their collective experience. It doesn't matter how you trade or what you do. We're interested in everything. We're also interested in trade plans and understanding that the market is a gaming process. It is not a predictive process. So let's go take a look. This is the ETH retail price. And remember, the market tends to operate like a shopping experience. So keeping that in mind, this is the ETH low. This is the settlement. And we'll go from there. So the market opens. Now, a couple things to think about in all fractals and time frames. The market goes up to go down. The market goes down to go up. And I always think of it as, gee, this is so obvious. It's obvious, but it's random. So don't worry about predicting. And it's up to you if you want to be a predictor. I have found it's better to be kind of an aligner and only get involved where you have a statistical edge. It's gaming. It's how the casinos have built larger casinos. They don't predict the outcome of any game or any hand when they play a card game. They just rely on a process that extracts an edge over time. That's, in my opinion, at least my experience with trading is. It's not predicting the next trade. It's only getting involved when you have an edge. So what is our edge? Let's take a look at this. And past performance is never indicative of future results. The outcome of everything is random, and psychologically, we're typically in a fear state because it's uncertain. So if you have all those emotional things, we understand that. That's what we work on in Trader Lab. This is part of the business. Casinos are not attached to the outcome of the next hand. We are emotionally attached to the outcome of the next trade, and it completely messes with us. And it takes a lot of discipline in order to be able to manage the fight and flight emotional triggers that are part of our, instincts and our survival as a species. We're pushing against our primal wiring, and that is an extremely powerful mechanism. It supersedes our conscious, or shall we say, our conscious brain. It is under the hood. So it operates no matter what we want to do. So opening higher in range, and you have to vet any statistics for yourself. They are available to you in the Trader Lab. There is a link in the bottom of YouTube. You'll be seeing these structured trades. You can download them. There's 60 PDFs, a library of webinars. It's all available to you. There's no cost. And these statistics, and you have to vet everything for yourself. The idea of Trader Lab is that you reverse engineer the things you find interesting and create a statistical edge. Gaming, not gambling. And of course, that's up to you. Okay, there's approximately an 82% probability we're going to test this level in the RTH. Now, the thing to understand is we have extreme volatility and speed. Now, when I see a lot of these trades, or at least under these conditions, what do I have to do? Well, for me, I can see a trade, but I have to be able to enter, and it has to fit my risk parameters of my plan. The fact I see a trade, if I can't take it, then my plan says, you cannot execute because you have to enter with a certain risk, etc. Okay? So when I see this here, this is a structured trade in the Trader Lab. Now, I'm mentioning it to you because it is a trade. I'm also going to tell you, based on my trade plan, I cannot take it because I have a location or a setup, and this is a trigger, but I have to wait for it to rotate and test back here. So, and then I have targets. I have this is my target down below. And again, there's no way to know if you'll just get the sellers and then we'll come across and take this out. So I have nothing here. I'm just going to let you know, though, it's a trade and it doesn't matter what it is. It's just the way this thing works. It's always maybe. Now, there's another thing to remember. The market goes up to go down and the market goes down to go up. Based on yesterday's behavior, we might consider that we might get some additional selling today. We also can consider, and this is also in Trader Lab, this is part of a process of understanding market mechanics, and that's what the Trader Lab is, structured trades, market mechanics, behavior, retail trader behavior, and trying not to do what they do. because we know statistically retail traders don't have a good outcome. Maybe we should understand what they do. You should take what you've learned in your investment as a retail trader and maybe see if you can get a yield from what you've learned by not doing what most retail traders do, instead making an asset instead of a liability. This is part of what Trader Lab is about. So this is micro high volume structure. This little node sitting right here in alignment with this is what sets up your short. And again, there's no entry. And now this is called VPOC migration. For me, my stop would have to be here. So I'm not getting involved in any of this. I do have a target here, but if I come across, then my short is off the table. Right here, my short is questionable as soon as we come above this. So let's watch and see the behavior. So resistance, resistance, and this is resistance. What this is called, I call it VPOC migration. And don't forget, we're only in 45 seconds. I blink a few times and 45 seconds has gone by. So that's why this is not actionable for me. And I also know in this current environment that volatility is high. And I have in my trade plan, there's going to be trades all day. And I want to settle out. One of the things I want to check for, and I'm just telling you my personal plan, I don't think it's the best plan. It just tends to work, for me. And it's a psychological thing. What is the volatility? What are the rotations? Do I need to adjust anything to what I see? I also know the open has a lot of volatility, and I want to make sure that the way I'm viewing the market is in alignment with the volatility. Is my risk adjustment correct? In other words, I typically run 3-point stops or less. In this environment, I cannot run that because of the speed, my execution, and so I've had to increase my stops. I've had to adjust the size of number of contracts I trade. So all of this is in my plan. So I'm set up, but I have to look and see if everything is kind of clicking. So for me, it's more important for me to make sure that I adjust what I'm doing to the conditions. So even if I see a trade in here, I'm not going to be taking them. So I just want to let you know that. So when I come across here, this is suggesting if there's buy stops here, I might underline, take them out. And the thing is, under different conditions, this would be a short, but this is not your walk in the park. This is your opening swing. We take it out. So that's why no short. Nada. So now I'm looking at the range and the volatility. Now I have to take you back to those levels I was showing you. I want you to see how things fit together. This, remember from the ETH, and it was like around here someplace at the time. This is filling in, by the way. It's full session. So it's going to show everything. I only use this for ETH before the RTH opens. Then this resets to 0 and it's the current auction. And this is just adding everything on top of ETH. So just so you know what's over there. This was that low volume node I showed you at the top of the stream. This is on the price map before we get here. This was the retail price that we had taken out yesterday. And if we check it from below and it's too high, we can rotate. If we rotate, it sets up something called mean reversion. Now, this is a little advanced. This is the first short I took. Why would I take a short? Well, buy stops are here. First sellers in the market. Market goes up to go down and goes down to go up. We get new sellers in here. I have a statistic open here, and I have the settlement. These are high probabilities. So what I'm thinking is early sellers, squeeze them, and now I have another location. So when I come up here, and I'm just saying this is the first trade I took, it's a bit advanced, but it's called mean reversion. And I'm trading in fractals. Now, the fact I take a trade doesn't mean anything. I also take stop. I take stops like everybody else. It's part of the joy. So let's look at the trade. Now, these are when I have levels, auction levels, and I'm above here. So what this tells me is I might only come back here, but if I don't find my buyers, I'm now at another level. So I have my buyers, I'm taking, and I'm seeing the sell icebergs, and I've got buyers. Buyers are running with the ball right here. Now, location. This is like real estate. Let's look. And guys, if you have questions, watch them. Now, this is not necessarily anything you guys should do. The goal of this stream is to show you how you might get in alignment with the condition of the market. And if you're allergic to taking stops, now I understand, it's like getting your thumb hit with a hammer, but the fact of the matter is it's cost of business and overhead. Casinos pay the gamblers. So let's look at this. So I'm looking here. And the other thing about low volume nodes, so you understand, they tend to get traded through because their stops, their swings actually are outside edges. That's what creates them. And then typically we run through something, test it, and go down. Well, in the ETH, when you come back to it, it's not a wall. It's actually an area that was not auctioned. That's why it's low volume. So if we push into the stops that are sitting here from the ETH, and I run into something that's material in the auction, so these are both auction related, and I find exhaustion, then I can anticipate a return to something. Okay, and so the something is part of the joy. So let's look. So right here, I've got my buyers. Now I see sellers right here. So this is a change. Where's my buyers? Let's look a little bit more. So buy stops, icebergs. What do I see here? One buy stop. So this, I have a buyer, but where's my buying above my level? See, that's how I look at this, and this is how I use order flow. Now, so basically what I'm doing is I'm overlaying. I call this the chassis. This is like a chassis. These levels are created by the chassis or the auction or participant behavior. This is a level created by the chassis. That's the chassis. So this is my chassis of participant behavior. This is the order flow tool. This is Bookmap. And in Bookmap, now I'm looking for alignment with the auction. So what is this? The auction is fractal. Think of Russian dolls. So this is the developing daily time frame, but inside it, we have another auction. And I think of these like stores. It's a consolidation, and all a consolidation is. What we see is chop, is what's too low, what's too high, what's fair. What is fair in this structure? Alignment. Let's look at that first. So right here, my antenna is up because I'm anticipating. And the thing about trading is nobody can predict, but you can participate or anticipate. Let me show you what I mean. So this is the volume. It's right here. Now it's only a suspect. When I'm here, and I'm doing this so you can identify the structure. I'm also going to draw a little something else in here for you. I want you to see structure. Because if you can learn to recognize structure, you're going to be way ahead of the pack, in my opinion. So right here, I get the chop. I got chop all over the place. I got a chop here, but I get my buyers above it. Chop here. I'm just showing you. Buyers above it. Chop here. Sellers. Micro high volume. What happens to these sellers? They get absorbed and we make a new high. This now is support. This is support. You can see it right there. I'm not going to mark all these things, but this is kind of how I'm watching this ladder of auction or consolidation. That's too low. What do you think of this one, Lewis? That one's too low. What about this one? A little bit too low. What about this one? Yeah, that one's too low until it isn't. Or too high. It's too low. until it becomes too high. Here's where it triggers. So I have my micro high volume here, and this is my consolidation structure, and I have my alignment. I'm taking my time. I want you to see how the market works, not what it'll do. That's a whole different issue. So trigger, pullback, location, location. Think real estate. What do I have here? Buyers. Buyers. Is this too high? Sellers again. What am I not taking out? I come back here. Where's my buyers? Now I got my sellers. So this is a short, stop is up here. This is a short, stop is up here. If your teeth are chattering and it breaks here, again, the longer you wait, the bigger your risk. And here's one of the things, early on, we all feel the emotions, the fear of loss. So what we want is certainty. Isn't that what we want? Well, where's the certainty in this trade? Do you get certain down here, but your risk is back here? Or are you more frightened? Let's just call it what it is. Fear. It's okay. We all feel it. Every time I put a trade on, I feel. Think of the words I'm using. Feel, fear. Because my mind, my reptilian brain cannot differentiate between taking a stop and the saber-toothed tiger. It cannot differentiate. It's danger. What do you do when you hear that danger or the rustling of the leaves, behind the tree? You go the other way if you're out on the tundra. Same thing. That's the fear. I don't want to get run over or bitten by the saber-toothed tiger. It doesn't matter to our emotional state that this is the optimum location to get involved because your risk is minimal, because there's always risk. We want the certainty, but look at your risk. Is that you? Think about it. Trader Lab can help you with that. So this is the short. So your short is basically here or here. So this is the trigger. Let me show you the trigger. So it's top, break low. Test. If right here is your trigger or here, and your stop is there. To me, in this volatility, that's a good risk. Now, where am I trying to go? You've got mid and VWAP, and you got overnight VPOC. So for me, my scale is here, and I'm going for this for the next. So let's just see, because it's called mean reversion. So this is the mean from the ETH. A mean is a high volume area. It might be support. If I get under it, then this is the developing mean. This creates a problem right here. I'm targeting this. This is called VPOC migration. Right here, the trade is in question. I have to get under here to get here. This is called the variable high volume node. I'm just going to mark it. You'll see why. Now I'm taking my time, and then I'm going to try to get it move along. But I want you to see how this might work. So this is the next target, and then we have this, the ETH low. So that was this trade. So let's watch this. This is my next target here, and I always am ahead of it by 2 ticks. So I get my next scale. Now I get this, and I'm thinking too low. I don't remember. Yeah, and I got taken out of this, okay? So I got to here, to here. And then I had a runner for the ETH low. That one got taken out, and then I didn't put the trade back on. So I'm just saying, that's just the way that one worked. I wanted to show you the short. Now, let's come back the other way. Questions. I'm going to come up and look at questions. I got a lot of trades in here today, but I don't have time to go over a lot of them. How we doing in YouTube, guys? If you get something out of this, please give a thumb up at the bottom there. It helps the stream. Also, remember there's a link in the bottom of YouTube. If you're interested in visiting the Bookmap Discord Trader Lab community, there's a lot of additional no-cost education. Trader Lab's no cost. Stocks, options, crypto, order flow with a high-tier tool like Bookmap. By the way, VPOC migration. Going to zero, Lewis, except not so much. But no way to know. I'm going to label this variable high volume node. Now, the way I use these, and remember, what I do, I'm just sharing ideas here. Every trader, what the idea of Trader Lab is that you can take concepts and leverage what other traders are doing. There's no right way to trade. I mean, but we can figure out what doesn't work, because it isn't the one trade. Most of us latch onto it, randomness, and think if we make it better, it won't be so random. That is common for retail traders. I did it. You're doing it, or you've done it. And we see something that has that, you can flip a coin and randomly it's going to be heads or tails, and that's fine. The idea of Trader Lab, though, is to differentiate between randomness and edge. And there's a big difference. And what we think as retail traders is we see patterns and they work at times. And we take a pattern and then we go back and we try to tweak everything. So when that pattern shows up, we're going to replicate it. I call that Trader Groundhog Day. I did a webinar on it. And you could spend years, I did, taking these random things and trying to codify them and then make them more be able to replicate them so they would have an edge. And even though there'd be winners and losers, which we anticipate, over time, they didn't have an edge. But the problem was I had multiple inputs. So when you have a variety of variables as inputs, it creates, you've heard the old saying, garbage in, garbage out. If you have variable inputs to create setups, then you don't have an edge. You just have randomness, and that you might as well be flipping the coin. I didn't understand that early on. And I even built trading systems where I used statistics, but they were all of it, in order to put the whole thing together. And then I would take individual setups and curve fit them. So I was doing optimizations. It didn't work. It worked great in the past, and then, so I had to keep re-optimizing it. And optimization is curve fitting. So no matter what I did, I always ended up coming back to the same place. It was Trader Groundhog Day. So things would work and then they'd break down. And the fact is, when they're breaking down, then I built a process where then I would just retweak, basically take a chunk of data, do walk forward testing, trade it for a couple of weeks and keep repeating this optimization process. So I did that with systems, and I was trading at that point across large number of asset classes. It had to be systematized. I couldn't do it by hand. But ultimately, it always ended up with the same issue. So it was not a good process. And even though it had runs of success, which is another problem, things actually work, over time, it just did not sustain an edge. Too many variables. So once we come across this and this, then off the shorts. Once you come across this and this, so once I'm across here, then this whole thing has changed, and now it's longs only. Let's remember what this is right here. This was created by wherever it was. Forgot. Where am I? Somewhere. Yeah, I think it was over here. So once I break through here, I have no shorts. Now I'm looking for longs. Trying to remember where it was. I wrote some notes down of these trades. Hold on. Okay. Actually, I took a short. I got to show you a short here. Yeah. Now, this is an interesting trade, this. Now, I took this trade, and I'm not saying anybody should have taken this trade. I took it, and I'll tell you why. This is an advanced advanced. Now this thing over here you see is noise. It's an algo. It's a bracketing algo and it's a distraction and it's garbage. I ignore it. What I'm looking at, and we have a filter for this, which I do not have on this one, where all this is filtered out and you just see the resting liquidity. I am interested in resting liquidity. So this is resting in the order book. And right here, this liquidity at the time is 1,400 contracts right there. This is order flow. This is important. Now, as the market's coming up, hold on one second. Let me just make sure I have a level here that was material. Yes, I do. Yesterday's high right here in this. So 1,400 contracts-ish and another 1,000 above them. So you got like 2,600 contracts right here in the limit order book to sell here. And what else is above yesterday's high? So this is a target coming up, and I was not on the long, and I'm looking for stops because there's going to be stops. So I have alignment. Now, this is an aggressive trade. It is a counter trend trade. Now, it's not remember, I don't recommend trades. I'm just showing you a process. So let's look. So right here is the liquidity. I see the absorption. I see icebergs. I have yesterday's high. I know there's stops here, and I don't know anything else. And I'm thinking, part of my brain is going, you don't want to do that. And the other part of my brain is saying, this is potentially a reversal structure. Let's develop it. So let's look at it. So I'm looking for yesterday's high to get taken out, and it could just keep going, or we're going to get profit taking over yesterday's high after the stops and potential icebergs. So all this now is in play. Let's look at this. I took a short. Not saying anybody else should. I was wondering if I should, and I said, well, I have a trade. And this is how this works. This is advanced. Stop sweep. Let's look at it. I'm going to show it to you, and then I'm going to take it out of here. I just want you to see something that you might find interesting. This is support. It's where this volume took place, and it's pretty much right there. So I have this. Now, I can't do anything with this. I see this, and I'm going, I don't know. But look what I got. Right? I'm not paying that. Yeah, but it's on sale. High volume. What happens here? I break below the volume. Too high. So this is too high. Now what? I've got this volume here, and this is where the sellers were. Several thousand contracts right here. I break below it. Right here, if I come back here to this volume, which is basically there, just going to throw another one on you. This is a Trader Lab advanced process. It's a short. Advanced. Just showing. Just sharing it with you. Notice where we are. I'm under here. And if you look over here, if I drew my little box, this is the outside edge of this. This is advanced. Break low. Where do I pull back? Here. Short in the trade. Well, advanced short for advanced traders in the Trader Lab. I got a scale, right? And I got taken out of it. Okay? Not a big deal. I'm just showing you a trade, just a trade. And it's counter trend, by the way. Right. Now, we have more. Now, the volume point of control shifts up. This sets up a different configuration. We can accept we're in a uptrend maybe for the day, okay? We took out yesterday's high, and this is called VPOC migration. VPOC migration, and you saw it going in the opposite direction before, when it was going down. Once we cross above it, then things are changing. When you have VPOC migration, it is suggesting that price is too low. So we want to record that in case we come back to check it. We have VWAP, mid, and VHVN, okay? And we have a structure that looks like this. And this is a low volume area. I'm going to label this. And you'll notice where this was. So I'm just going to use this. I'm going to move it up a little bit. I'm going to take the little X off here because that I just do that for ETH, so I know it's not current. And this is now what this represents is an outside edge of a distribution. It also is above this level, previous naked volume point of control. I think I forgot to mention one other thing about the short. Let me see if I can remember. Well, I'm going to skip it. Okay, now we have VPOC migration. So what that suggests, too low, this is your retail price. I'm going to take all these white lines off. Just give me a second to get rid of them. Now, we come up here. By the way, let me try to remember what I was doing over here now. I did a mean reversion trade. When was it? 72. Ah, okay. So this now is the VPOC, and this is an open target at 95. And at 9:30, we have something called the IB stat. Has over 90% probability of getting taken out. Past performance not necessarily indicative of future results. 90% relates to the first hour's high and low, and we'll take out one of them. And given that we're squeezing the shorts out, I'm going for this. So now I have to find a place to get long. So this is now, remember, if I was going short earlier to come back to the mean, and now the mean is above me, I want to get long to come back to the mean and take this out and get to 95. So the trade now is a long back here. And I've had other longs in here, but I'm going to stick with the structured trades. So the ideal trade for me is to come out here. But in the meantime, I have this stat, which is the high, current high at 9:30 Central Time. And this is an open target. Remember, 95. So I want to get long to come here, to come out the top, and to go there. So this is the next trade. This is a structured trade in TraderLab. So let me show it to you. Now, this is hard. Now, when I mean hard, they're all hard. But let me tell you what makes it difficult. When you're in mean reversion, which is rotational trading, it's a different context and a different plan. So let's think about what's going on here. The market is going up, so long, which means, unless you're a counter trend trader, that it's longs only, unless your plan is two-sided. Then the question becomes, where's the outside edge? You know, and that is really part of the mystery. Let's see if we can find the outside edge. And this is hard. So, and this is my least favorite. I always like to say this because it's just the way it is. So I'm looking for a long. Let's see if we can find a long. Now, this is my mean. So as soon as I cross over, I know if I don't bounce from here and keep going, then I'm going to come out somewhere. And this is the joy. Where's somewhere? And now I have this structure. This is outside here, and this is outside over here. So when you come down here, this is a low volume area, and it's right here. So right here, I'm looking at a long. Let me show you. So I have this is too high, I break low. This is my volume. Just mentally see the box around this. I come back and check it. Too high. So this seller is still in control. Buyers took a shot here, sellers are selling and these buyers are getting, are trying to absorb the sellers here. They fail. These guys are still in control. Sellers are in control. Buyer tries here, no bueno. Sellers still in control. Buyer here, not so much. Sellers in control, sellers in control, sellers in control, sellers in control. Am I going to turn this down? Probably a little noisy for you guys. How are we doing in YouTube, guys? By the way, please give a thumb up in the bottom of YouTube. Now, we're looking for a long, and this is called mean reversion. And in Trader Lab, we like to say, yes, it's mean. What's hard about this trade is where's the outside? Because you can get fooled. I get fooled a lot. I take most of my stops in this configuration because if I see a triggering structure, I have to put my trade on, and then my stop's going to go under the trigger, and I might only get a little counter rotation and then get taken out. I accept that. I'm going to say I don't like it. How can I like it? I accept it. One moment, please. Okay. So right here, I come down. I'm only got seller, seller, seller. So right here, but right here, so right here, going to zero. That's, and I say that just because I'm sitting here like everybody else. I don't know. I have volume here, no buyers, sellers in control. I break low. Volume here, sellers, sellers, volume here, and break high. So that's a change. Okay. So what do I have? What happened here? Well, I don't see any sellers. Unless I open it up and I break them apart. And there's a seller here. So I got seller, seller, sellers. Every time you see sellers here, here we had a buyer above this seller, but they were absorbed. How do I know that? Because we didn't go anywhere and we got a selling volume below it. Now I have no buyers above this buyer that I can see. I mean, there's buyers and sellers, but I mean volume. And this is delta. So the delta is the aggressor. Delta is made up of market orders, right? And those are stops and initiators, and we don't know the mix. So seller, I'm still not seeing my buy volume. So the sellers are in control here. Sellers, sell stops are coming out. Sellers, they're in control. Now what? I see a buyer. Now, is this the first time really that we're seeing a buyer above a seller, and it barely happened here, but they're not above this? Notice the change in behavior. Now, this is order flow. So I see a change in behavior right here. So what that is telling me, and I have to always say potentially because I'm clueless, not ignorant, clueless. There is a difference, that these guys were potentially absorbed. So I know these guys now, since this is above them, and so the buyers are now potentially taking control. I've got resistance here, and I have this become support, believe it or not. The difference is where they're located. Sellers are in control here. Sellers are potentially absorbed here. And the reason I understand that is because the buyers now, the volume, the delta is above this. So right now, the issue becomes, where's the volume? So in the microstructure, you can kind of see it. Let's do this so you could see it. Now, until I see this, I just assume that we're just going to come here and continue. All right. When I see this, now I'm going to draw a little line here. I just want you to see structure. Remember, I don't know. I can prove I'm clueless. I prove it to myself every day because I take stops because I'm in a random environment. Remember, if you're looking not to take stops, this is not trading. So right here, I have a suspect and I have my volume here. So when I have this, I'm just going, well, okay. Let's see what's going to happen. Remember what the context is. Up, this is my target. And I have the IB stat above and the naked volume point of control at 95. If this trade is going to work, it's worth a stop to get from here to here and then potentially to 95. That's the trade. So I take this thing. Now there's another way to view this. I'm going to show you another thing. I get my buyers here and I get my test. This is a suspect. I get my buyers here. Now what? My volume is moving higher. There. Now this is a suspect. I'm looking at this and I'm assuming, like everybody else, this is resistance. I come back here. If I don't get below here, then I know these guys are stuck. This is the shootout right here. I break high. I pull back. I see my buyers again. Anywhere in here is a potential long. Here's my high volume structure. I see my sellers. Where's my buyers? Here and here. If I expand my box, just going to try to do this a little better for you guys. And I just expanded to the breakout, which is here. So this is a suspect. This makes it more of a suspect. I just pulled back to the top of this consolidation, still a suspect. I see a buyer here. I see this and I break out. This is an entry. This is an entry subject to your aggression, and the stop is under here. This is the target. Let's just watch the behavior. See where we come? See where we come. So how do you deal with this thing? Here, 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 here. All these are long entries. Stop under here. And then say Laguerre. This is a structured trade in the Trader Lab, and this is where you're going, hopefully. Now you can scale to get risk neutral. This is trade plan specific. This is the primary target. It's the mean, as in mean reversion. Over 90% probability. Past performance is not indicative of future results. You're going to take this thing out, scale. So scale, 95 target. Let's watch. And there's more. We have more trades here. And then to here. Target. That's a structured trade in Trader Lab. Now what you do from here, up to you. Questions on this. This is the mean reversion trade. Are you guys with me? How are we doing in YouTube? Please give a thumb up in the bottom of YouTube. This is Trader Lab. This is Trader Lab Trading. These are structured trades. There's 60 PDFs of these that you can download. If you click the link in the bottom of YouTube, it will take you to the Bookmap Discord Trader Lab community. There is no cost. And the idea of me sharing these things with you is that you take them and then make them your own. Reverse engineer them. You'll find where your groove is, I don't use any indicators. What I do is I use structured trades, and I only get involved in the market where I perceive I have an edge, and then the outcome is random. It's no different than how the casinos operate. So I'm going to show you some more trades if you want to see them. Now, what do we have here? Resting liquidity here and here. So, and this is also has a probability. It's the ETH high. I was out of the trade here. So I just trade the targets. I don't, and the targeting for me, and I'm only talking about how I do it, not what anybody should do, is I trade the targets. And then let me give you the or if I have runners, in other words, depending on the number of contracts I run, and this is just an individual thing, if I'm going for what they call, you remember in American football, the Hail Mary pass, where you just throw it and close your eyes, hope somebody catches it and it's not intercepted, then I have a runner and it's trade management. So I did not for this. I just was done with this. But that's a pretty nice trade, and this is a Trader Lab trade. And it was from wherever it was out here. Yeah, down in here, So the long is roughly from 70 to 95. I'm good with that. And that's multiple contracts, don't forget. So that's okay. I'm good with that. So now we come up, we get the ETH high. And I know I took a short someplace around here. Let me see if I can find it. Might not have written this down. We have a trade here. And this is aggressive. This is a counter trend trade. I'm going to show it to you. Well, there's actually two trades here. Let me not get ahead of myself. Once you break the IB at 930, let me show it to you. Forgot about this. So 930, we're going for this. Okay. This is the IB high. Once we break above it, it sets up the IB continuation trade. So there's another setup in here, and I'm going to show it to you. Forgot all about it. So this is a long for the mean reversion. Once you do this, this is a statistic, you're going for 95. The pullback here, and this is a little more advanced, against this structure sets up another long for what's called the IB continuation trade. Now, it's a tricky trade because once you take this out, there's a couple possibilities. When you take this out, there's actually two trades here. One is a short to here. The other one would be a long back to here and then to here. Now, for me, I did not get involved with this, okay? But this is a structured trade, but it's more aggressive because, and let me explain what the issues are with this trade. So this is the proper location for this trade to go for this statistic and that target. What this sets up is right here, you're going for this, remember, statistic over 90%, and then you get the rotation back. This is called the IBF or IB failure. And all it is a counter trend trade. And this is the primary target if you took a short here. Now, for me, I'm already in a long going for this, so I don't have a short. But subject to my skill and trade plan, has nothing really to do, it has to do more with edge. Do you have an edge here? Let's look at the micro structure. This is the retail price. Now, there's a way to think about this, and it's a bit advanced, is if I pull back here, this was too low. I had my sellers here. Chop, chop, chop. This is your consolidation right here. This is the ultimate retail price today so far. And there's two possibilities. I come out here, I come back here, I bounce from here and continue, or I rotate back down and come back outside and we do this. Mean reversion, rotational trading. So this is a higher risk trade, but I'm going to share it with you because we have a trade here in TraderLab. Actually, now I remember what I did. It all comes back to me now. It does come back. Let me see what happened here. Yeah. Okay. This is your micro high volume. This is resistance. You can see it here. We come back here. I think I did an ad. Yeah, it comes back now. I did an ad here and I got taken out. Okay, of the whole bundle. Now it comes back. I rotate up after holding this. I mean, I got taken out right here and I'm thinking, you put your stop in the wrong place. That's an error. I made an error. My stop was supposed to be under here. I put my stop here. I got taken out of everything. That's what happened. Now, right here, it breaks high. I pull back. I'm now leaning against my structure that I should have been leaning against. I do make errors, and it's because I get myopic. It's a weakness of mine. I come back outside. I put the trade back on, and now I scale, and I'm going to my 95. Now it comes back. I knew I did something weird there. So that was it. Okay, so basically I had my positions on. going for this. I did an add. I put my stop in the wrong place. So I added. It got taken out. Put it back on. Scaled. So that worked out, but it was a poor trade management. Yeah, I do make errors. I get my open. It's just something that happens to me at times, and I'm trying to get better at it. It doesn't matter. I'm trading going on 45 years. I typically will make, when I don't make any errors for the day, it's a great day. Doesn't matter if I get stopped out or not because I'm following my plan. When I do something or I forget something, because I'm more involved in, like I'm looking at this and I'm thinking, oh, here, and it's mean reversion. Why is my stop sitting there? Because I was keeping my stop at the high volume node and it should have been under the structure. I want you to know exactly what the error is right here. The stop was supposed to be here and my stop was there. Okay? I want you to know that. I don't know how many of these, in these chats, traders are going to tell you their mistakes. I make them. So this here is our resting liquidity, ETH high. Anyway, I'm out of the trade there. Now, I did get a short going after this. I don't remember where it is. Might be here. I don't know. I didn't write these down. So I'm going to try to narrate this for you. Because we have a trade in here called the IBF, and it's a mean reversion trade. I was looking for it to come here, to take out the stops and to come outside. So this becomes counter trend. Actually, that's it. So, and this had happened. Yeah, this was my last trade. It was a short. Because once I stream, I can't trade anymore. I've done that in the past, and I will tell you, that's I'm not a good multitasker, especially if I can't pay attention to everything. And I'm only looking at Bookmap here. I'm not looking, and I'm going to come up in a moment. I'm going to show you my last trade, and then I'm going to come up. So let's look at this. So I don't pick highs and lows. I'm not any good at it, but I know that I'm away from the mean. I know I'm above the IB, and I have two possible trades in here. I have the IB continuation trade, which would be the long, and which was the long to continue, and this is resistance, this node right here, and this. And I have, if I get under here, the potential to mean revert and come back around. So I have two trades. So let's look. So I have this here, this high volume. I'm going to draw a little line over here so you can see it. Now I'm looking at this. I'm looking at this. I'm looking at the icebergs. I'm just looking at it. And I'm going, well, we had a nice run. So I'm going to label this for you. Then we'll get all these lines out of here. So here's the volume. I break away. So I have microstructure up here. I can't do anything with this. It's right in here. I break. I see the absorption. Sellers now take over. This is my outside edge. These guys get absorbed. I come back here to the volume. I see my sellers again. Buyers, remember the buyers are under the bus here. Now I got my buyers here. Sellers are under the bus on this side. So you've got two sides. That's always the way it is. My volume is here. So I'm looking at this and I'm thinking, this looks like a short. Now I know the trend is up, but I also know the market is long. And if I'm a day trader and I'm trading rotations, remember the market goes up to go down and goes down to go up. So it does it in all time frames and fractals. There's my liquidity. So I know this we might return up here, but I know that this is the mean and it's yesterday's high. So if I can get on a short, and this is counter trend, so I'm not saying anybody should even be doing this. I'm just saying this is what I did. And the reason was the structure of the auction. So too high, seller. So I know this is too high and this is too high. Let's look at the behavior. Right here, I break under the IB. I pull back and test the IB. I'm against this structure. Right here, I'm going to show you. Now, this gets a little more advanced and it might make you nutty and you don't need to be even thinking about it. But this is too high. All this is too high. I break away and I have more volume here. You can see it. This is still more advanced. You can see the volume here. So I know this is too high. This is too high. And there's my sellers. So now I have my volume here. There's my sellers. There's my IB and there's the mean. If I pull back to the IB and I'm leaning on this, this is called the IBF and this is my target. And one of the things that got me on this trade was we didn't get here yet. So I know if I get short, I can scale here and then I'm looking for it to take out longs. Let's look at the trade. And VWAP. So this trade for me, VWAP was my target and possibly lower, but you know, that was it. This is my last trade. So I got out of here and I haven't looked at any of this because I've been with you guys. Now we have another trade in the Trader Lab. Wish I would have got this one. This is called VWAP to VPOC. It is a Trader Lab structured trade. The idea of VWAP to VPOC. So the short is to the VWAP. The long is from the VWAP, and look what's under it. Remember where we got long for mean reversion. Notice where our support is on the price map from all the way here. Remember the long from there to 95? Too low. It's there, and now we have a structured trade, VWAP to VPOC to IB. That's the next trade. So short, mean reversion, outside. This is the same context, outside in trading. I just happened to take the short, and you could have skipped the short and just taken the long. This is Trader Lab trading, and it's a structured trade. And let's look at the structure. So you got this underneath you, don't forget. So you would know if you're in Trader Lab that you got the buyers were under here. So what happens? I get these guys, and you know, it's possible we're going to keep going. This is part of the joy, but it's a structured trade. Now, Trader Lab in Discord, did you guys do the VWAP to VPOC trade? How'd you guys do with that? How we doing in YouTube, guys? I hope you're getting something out of this. This is the Trader Lab. This is basically what this is structured trades. And there's 60 PDFs of these you can download. And the job, there's no plug and play in trading, guys. So, you know, everybody wants the ATM in the basement and you just show up at your, you know, your trade station and you put a couple bucks in the slot and it spits money out. Doesn't work that way. This is gaming, which means random outcomes in a random environment. And only in the goal of a trader is to only interact when they have statistical edge. That means most of the time you're not involved. You're sitting on the sidelines. You're patiently waiting. It's no different than a hunter behind the tree. We are behind the tree. The tree is there, and the VWAP to VPOC is a structured trade. Now, you need a trigger. Where is it? Let's start looking. This is location. This is too low. Did you know that? Well, here's what we know. We know that was too low. We know this is a structured trade. What we don't know is, are we going to keep going? How about that? Nobody knows that. That's why you take risk in order to get outsized gains. So here's what's going on. I have my sellers in control. Sellers in control. I see buyers here. I touch my location. Now that, I'm going to tell you what that means to me. Maybe. That's all it is. This could go through it, come above it. There's no precision. So let's not think about it's going to do this. It's going to do whatever it does. I see my buyers down here. I don't see my sellers at the moment. buyers, buyers, buyers. There's a seller, the delta, and a buy. That's absorption. So the buyers took on this seller and ate them up. Sellers are up here. Buyers are here. I get my downside rotation. Right here is where my buyers were. Let's now get into the minutia. So no way to know. But notice this. I hope this is registering. This is why I draw these little lines, and I do. So right here, I have micro volume, and it's a suspect. It's nothing more. So, and I get my buyer. My sellers are in control here. Why? Where's my buyer above this guy? Here's my volume. I have no buyers here. So this is resistance. I break above it. Now I have a trigger. Watch. Where's my volume? It's moving higher. It's here. So I have microstructure here. I have the structure from last time I was down here. And I wasn't able to take this because I'm visiting with you guys. But let's watch this. And now I have my buyers above here. I have a stop sweep. I had my buyers absorb this guy, and my buyers are now back in control here. Structured trade, high volume now here. High volume here. Outside edge is out here. And, clueless, right? Let's keep the clueless thing open because clueless is a constant for me because it's maybe. The best you have in trading, guys, is maybe. Maybe the trade will work, maybe it won't. So your entry is here and here. Your stop goes under here or under here. And once it does this, your stop can move. That's up to you. You got to vet this. And where am I going? Here. And then where else am I going? The IB. Here. These are the targets. This is a structured trade. I'm okay with this. VWAP to VPOC. It's a 10-point move. This is Trader Lab. And what was too high? Next target is this, by the way. There. Next target. This trade could be done right here. Okay. Now, there's more. We know this was too high. Subject to number of contracts. Now, lots of times what I do, and these aren't recommendations, I'll just throw a 2 on or 3, So, but let's assume, and in Trade Lab, we always talk about it 2. So this is called mean reversion. It's the same trade that we took from this level before that I showed you. And by the way, this stream's available to everyone to review, reverse engineer, screenshot, compared to what you did today, and see how they compare. And by the way, so where are we going? Here. And if I come above here, where am I going? Possibly here or higher. And where was the resting liquidity? It's right there. Now, all of this is up to you. Okay. And I think I might be getting pretty current. Oh, yeah. Okay. Notice where we are. So that's the last trade, structured trade, at least in Trader Lab. Now, I can go further, but I'm going to look up for questions. And if you have them, please post them. If you're in YouTube, also, if you're in YouTube, down below, there's a thumb. Please give a thumb up. There's also the link in the bottom of YouTube. If you're interested in visiting the Bookmap Discord Trader Lab community, there's no cost. It's a 24-hour, 7-day-a-week community. We have traders all over the planet. There's traders in the Asian session, London, all over the place. And of course, ETH, RTH, all that. So why it reached 53.12? Is that the question? Why did it reach 53.12? I don't know. You're asking me why. I can't tell you why it does something. I can tell you why it might do something. I cannot explain. I do know this is resting liquidity, and the market tends to trade to liquidity. And notice what this did here. This is targets. Now, is it going to go there? There's no way to know. So, I mean, why didn't it go here last time we were up here? It's just sitting in the order book. You know, why would, notice where we came here? It's still in the book. So when I'm trading order flow, I know it's here. I don't know what's going to happen. And here's an exact example of what we don't know. Let's look here. We get into this thing, and there's the icebergs are selling. That's absorption. So this is the limit order book. These are the aggressors, the buyers, okay, and buy stops. So the buyers go into the liquidity, which had five. Here, you'll like this. Let's look at how this helps us. There's 2,000 sitting here. There's 800 sitting here. As we approach it, we go through it. There's 2,000 sitting up here. Let's just watch what happens. Notice what now these executed, and 1,100 went off, traded here, and there's 2,000 sitting up there. Let's just watch order flow here. Now, we don't know what the intent is. We know this is a large player that just wants to do business, and we can see it because we have the heat map and we have order flow, so we can see it resting in the book. They drop down. Now, there's so much phenomena that goes on in here, but why did this order, and now there's 5,200 sitting here, why did it drop down? Does that mean that this seller wants to really get out of Dodge at 53.10? We pull back, and look what we do. Now we're interacting at the 53.10, and there's 4,000 still sitting there. So you can see the absorption. So the buyers are here, and these guys are selling. Now remember, so for me, if I trade into this, if I understand order flow, and remember, it's like stepping on a banana peel, these guys could have just pulled, and that was not a real order, but they dropped down. That means they feel a sense of urgency to get filled. Now, I don't know, I mean, that's a 5-point drop for that number of contracts. That's a lot. So if I'm in a long for any reason, this is a target. Not necessarily a short, but let's watch the behavior. Now let's go a little further with this. I'm going to take you now to microstructure. These are not trade recommendations. This is how you can narrate. I call this narration. This is like reading sheet music. I'm reading participant behavior. I'm not predicting. I don't know what's going to happen. Why didn't we go here? You know what? I'm clueless. I do know what happened here, and we've got above it. And there's another little piece to this, and you saw me do it earlier. Let me label this, and then I'm going to give you something to think about. We interacted here. Do you remember a structured trade that was based on? Now, this is advanced. These are not trade recommendations. Getting short, you might think that's lunacy, and I'd be certainly bound to agree with you. But I want you to see market mechanics. That's the purpose, to help you understand how the market works. That's what it'll do. What I know is this is important. This is important. So that's what I know at this point. So here I get my chop, chop, chop. This is now support. Why? The buyers consume the sellers. This is potential resistance, the next area to interact. I break below this. I come back to it from below. What does that set up in Trader Lab for an advanced trade concept? A short. Now, it's not a short. It could be just get out of Dodge. Now what? This drops down to here. This is now resistance. Let's watch the behavior. Let's just watch the behavior and see if we can see anything. Do you see what I'm saying? This is all advanced, by the way. And I'm not recommending, of course, that anybody do anything because, But if you can learn to put pieces together that are based on how the market works, not what it will do. And by the way, why is this important? This is too low. This was your retail price. This is a support area if you want to use it that way. And this is much more scalpy oriented, so I obviously don't recommend this. But certain traders trade like this. Me, I go for more the broad stroke, so I tend to prefer based on the amount of risk I take. And now, just to add another element of crazy into this, what is this condition? If this is too low, this is retail. This is too high. It's an outside edge, low volume zone. This is resistance. That's resistance. This is too high. So, and there's 5,000 sitting in the book. So what I know is, subject to my plan, and I might not have a plan, and neither do you, I can get long. I can come back to this. This is still mean reversion and a fractal, and this is my target. And then this, of course. But this is the main target. So it could just be a scalp, But it's, it's a 10-point rotation. If it's not in your plan, nothing to think about. Questions, guys? And please give a thumb up in the bottom of YouTube. At the bottom, a thumb. And how we doing, guys, in the Trader Lab? By the way, remember, if you're stopped by and you're just visiting in YouTube, thanks for visiting the Bookmap Discord Trader Lab community. This stream is available to Bookmap Discord Trader Lab participants to reverse engineer, etc. So that's why this is not a short. It's a target in an uptrend. So the way you can operate with this is you see this, you are out, you look for a continuation trade to come back here. It's all up to you. I don't have a trade, by the way, at this point. So for me, now this is the gap, by the way. So this is a target also. And if we get inside of the range from here, it could definitely be a barn burner. These are targets coming up. Now, not recommendations, but this 47-ish and 50, whatever this is, 57. So these are targets also on the price map. Who knows? And who knew? Nobody. At least not me. So I don't predict anything because I'm clueless. But this is important now. We took this out, so this becomes a potential support level. I suggest you might make a mark on it and just see if we come back to it what the behavior is. You also have this and this outside edge. So you have this, this, these levels, and you have this. There's a link in the bottom of YouTube. By the way, in the Bookmap Discord Trader Lab community, there's 60 PDFs of these structured trades, a lot of examples with explanations. I did them many years ago. I'm not a vendor. This is really, Bookmap asked me if I would stream a number of years ago. They kind of liked, I guess, a lot of traders were asking me, what are you doing? And I've probably done almost everything you guys have done because I started out in 1980. We didn't have computers. There was no internet. There was nothing. We did not have candlesticks. We didn't have anything. I mean, we did, but what it was is measured moves primarily, head and shoulders, triangles, pennants, flags, all that kind of stuff. So, and I've certainly gone down the same roads that most of you have. I built trading systems. I shared an office with George Lane. He created stochastics, so I got into oscillators early on. He had an Apple I. I had an Apple IIe, so I was high tech. So that's where I started. So I would say just about everything in the retail space I've explored, and I got to a point where I didn't need to explore anymore. I found that the fact that a software toolbox has 100 things in it, you need to ask yourself why, and why retail traders don't have longevity in this business. That's the other pressing question. And if you're doing what they do, curve fitting and reverse, trying to get something to fit, that's what they do, and that doesn't statistically have a good outcome. So I always think of this like paying tuition. We all pay to learn. The thing is, are you repeating the class with a derivative of the same process that does not have an edge, or can you take what you've learned and say, okay, what can I get from this? You know the old saying, well, at least I got something. Well, if you're still doing the same thing or a derivative of what doesn't work, what did you get? You're repeating the class. You've just found another way and another, quote, indicator that's price-based derivative. What I do is I don't use indicators. I do use order flow, and I do take stops. But what I found was if I wait patiently for the structures that, for me, I can understand, I then have an opportunity to participate. Right here, I am seeing some exhaustion. I saw absorption there. From there, but it still might not be done, not my job. I have micro high volume right here. I do not fade this. I have buyers here, and I know this was important. So this is an important level. I'm going to watch that level. And right now, what I have on the hit parade is the gap and higher. Final questions, guys. Please post your questions, and please give a thumb up in YouTube down at the bottom. Sorry. The buying is pretty aggressive, guys. So just something to keep in mind. You've got this and you got this. So these are levels to observe. So is this outside edge. And for me, there's no reason to be short anything at the moment. So in my plan, and these are not recommendations, I buy the counter rotations in this configuration. And I will take stops because it's not about being right. It's about protecting and managing risk to get outsized opportunity when it presents itself. So don't get hung up on not losing. Everybody pays. If you have a business, you have cost of production and overhead. You really need to reframe it. Your feelings have nothing to do with business. If you didn't pay your bills because you don't like to in a business, you'd be out of business. If you don't take your stop, which is like paying overhead and cost of production, and you refuse to pay it by moving your stop away, you will put yourself out of business. Think about it. That's why you need, if you can't manage these elements, come to Trader Lab. We're all in the same boat. We all experience the same things, and we all take stops. What we want to be able to do, and that's what Trader Lab is built on, is help you build a business and understand why other retail traders fail and what we can do to offset the impulses, the emotions, the irrational behavior that's triggered by our primal wiring. You can have the best intentions in the world and you say, darn, I just couldn't. I did all this. And in the moment, as soon as you lose concentration, that other hand that comes in and does something not in your best interest, we call that Hyde. Jekyll and Hyde. Hyde is always lurking, whispering in your ear. You're wired that way. So how do you deal with that? Come to Trader Lab, learn how to create an edge. And when you have a tangible edge, you're not being managed by your emotional states. You're in a better situation to control because you've created something that is random trading and uncertain, generates fear, and you've made it tangible. If it's tangible, you can look at a metric, and that helps you control hide. There's no perfection. You'll never reach perfection, but you can reach potentially profitability and sustainability if you have a vetted trade plan and develop the discipline to execute. Thumb up, please. Thanks for visiting the Trader Lab today. Remember, these streams are available exclusively to Bookmap Discard Trader Lab participants. There's a link in the bottom of YouTube if you want to access the Trader Lab, and a lot of additional no-cost education. There is no cost to be part of the Trader Lab community, and you can follow streams about stocks, options, crypto, order flow with a high-tier tool like Bookmap, market maker behavior, algorithmic behavior, and a lot more. Swing trading, options, etc. Thanks again, guys. Please give a thumb up. Remember, if you're in Trader Lab, this stream's available exclusively to you to reverse engineer, screenshot, compared to what your structured trades operated today, and to move the ball forward so we can all get better together. Thanks, guys. Look forward to seeing you tomorrow. And don't forget the thumb up in YouTube down at the bottom. Hope you got something from today's stream.